You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome to TWIFO, This Week in Futures Options, a program where pretty much the name says it all. We talk about the week that was and indeed still is, from a futures, options trading, trending, analysis, open interest, unusual activity, all that fun stuff. We mix it all up together in the tasty, delicious stew that is TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network. You guys know the drill. If you just want to mainline TWIFO, you can do that. You can subscribe to that or stream it on all the different platforms, our app, our website, iTunes, and Stitcher, or you can go grab the full network and get everything. Get the news, you get the playbook, you get the content coming out of OIC right now, all the great panels that have been hitting our network for the last week and the great interviews I did, all that stuff's available on the network. Probably the easiest thing to do, to subscribe to that, set it and forget it. You're good to go. You'll get everything. Trust me, we'll keep you busy with options content here. Also, if you want to listen to us live every Friday, 1:30 p.m. Central via Mixlr, you should probably follow us in Mixlr while you're at it over there too, because you have a lot of fun surprises that hit that feed throughout the week. You never know who's going to swing by our studio, quite frankly, and neither do we sometimes, which makes it kind of fun. And so you never know what you're going to hit live. So if you're paying attention, if you're subscribing to that feed, you get notified. We had people in here from Credit Suisse this week talking about all things vol. We had people from Vela talking about tech and crypto and stuff. So you never know it's going to hit that feed outside of Option Block and TWIFO and Vol Views and all the other regular shows that we do. So probably better off subscribing, follow us in Mixlr, and you'll get notified the second we go live with all of that good stuff. If you hear a little bit of construction, they're doing some construction on the building here today, listeners. So we've insulated the studio, but sometimes it shakes through the walls. So if you hear that, that's what you're hearing, listeners. But let me join now. Let me turn across. Of course, if you'd like to hear from you guys as well, questions, comments, insights, pearls of wisdom, hit us up. You guys know how to do just that. But I am pleased to say on the program this week, I'm joined once again by my cohort, my partner in crime, the founder of Bantix Technologies, Mr. Nick Howard. Nick, welcome back to the show. It felt weird. I'm gonna admit it felt a little weird without you on the show last week.
Yeah, there's a big personality void, right? That occurs if I take.
Yeah, it just falls off a cliff once you're not here, sir.
It's good to be back. I wish we were doing the show outside, though. We should, find a patio somewhere. And
tell you what, there is a nice patio right above the small cheval here next to the studio. We could head out there, have some delicious gourmet burgers, do the show. What do you think? Get a little ambient noise from the river.
I like it. I think Small Cheval should also sponsor us once a month.
I agree.
Don't you think?
With delicious burgers. We'll accept payment in delicious gourmet burgers. There are worse things. Listeners, if you don't know what we're talking about, it's the place everyone waits for hours to get their gourmet burgers. It's crazy over here. Of course, our buddy Sean Smith, he just started on the show, and apparently the TWIFO gods struck him down because he was sick with pneumonia last week, still kind of recovering from that this week. So won't be able to join us. We wish him well over there. Of course, all things fun cooking in the land of Russell. But Nick, since you're back on the show this week, I know you've been keeping an eye on the shiny stuff. So maybe we'll start there, because it has been an interesting week for all things gold. Gold coming out the end of the week here, right around a little bit north of the 1,300 handle, 1,310. Excuse me, to be precise here, wrapping up the week. Up about 15 handles, so a good week here for all things gold. By the way, of course, you guys can see this for yourself. CMEgroup.com/TWIFO, TWIFO. That is, of course, where you can find all these great reports that Nick and I are talking about here throughout the show. If you're listening after the fact on the podcast, I know many of you are, make sure you change the expiration settings so you could see exactly what we're looking at here. And if you were doing that, you'd see that even though, Nick, how long have you and I now been saying that gold vol is just in the toilet? Well, it continues to be even more in the toilet this week. It doesn't seem possible, does it? That every week they could squeeze more blood from that stone, yet apparently they have done it again, sir, out here in Crude land.
Yes, it's actually super low, and really this is playing into all the stuff that we've been talking about since we've been doing the show. If we look at where the futures are and where they've come from, so if we go out there and look at like a 3-month range, we're coming off of, we're down, we traded below 1,300 again. We're coming off highs like 1,367, and probably in the last month or so, well, it's just been a downward decline. It's been a downward trend for the last month, but this is kind of how we like to trade gold. This is what we talk about all the time. And I put something out independently earlier today with a bunch of supporting documents about the trade. So we're at like 30-day expiration now. After this weekend, it'll be just under 30 days. We are pretty much at or near the bottom of our volatility. The strikes at the bottom of this range are, or if we look a little, like when I like to talk about cheap vol, I like to go on the downside from the at the money, where the 20 and 25 delta strikes are like the 1280 and 1285. We have maximum open interest down on those strikes, which means we have good support. We have the lowest volatility down on those strikes. So it's really lining up for that long vol, long futures trade where, if something were to happen, we probably get a kick up in volatility. If we continued through that strike, it would take a lot. But at the same time, the stuff I tweeted out, you'll see I did the 1280, the 20 delta, and the 1285, which is 25 delta. They ironically had the same break even. One was obviously cheaper than the other by about a $1.80, but really quick break evens. easy scalping. You got 30 days left. I don't think this range is I don't think we're going to be stuck down. I think we're going to bounce around. We've seen good $10, $15 movements. You said today we were up. You see that today. So yeah, we say it all the time. Gold vol is low, but it doesn't mean it's not a good buy from a movement standpoint, because when we talk about paying the rent and all those kind of things, gold is definitely moving enough to give you value in anything that you're purchasing. And like I said, it's probably a little low today, but I think in general, which makes it even more attractive come next week. But it's just one of those things. It's lining up pretty well. Very cheap vol. You get a good delta on it. Yeah, I like it. And just from a sort of observational standpoint, we're up almost. I'm looking at this month so far. We're up 28% in open interest just this month. So that's really pretty good. And an increase in that the front month, almost 62%. And then for this week alone, from an OI standpoint, which was going in today was about 170,000 open interest, and that July contract traded 94,000 this week. So pretty good amount of turnover in that trade, and with good reason. There's a lot of movement, but I still like it. I like buying the puts and buying futures, and I think you could scalp them. You got 30 days. You're on lows. Can't get hurt too much more in vol. And if something happens on the downside, you're covered. And if something goes on the upside, you get your money back right away. So that's kind of where I'm living right now.
It's a good place to live, sir. Yeah, gold's been an interesting one to keep an eye on recently. Like you mentioned, we always say how much lower can it get in vol, and yet it has. But you're right, the movement makes up for it. Even if you're buying that vol, it's still looking pretty good for you here. You mentioned the strength of the open interest over the month. This week, up nearly 10%, OI about 9.5%. And if you look in here saying what was lighting it up this week, well, it was out in July. The monthly is still where the lion's share of the action is in gold. For whatever reason, the gold weeklies not really lighting it up. It's in the monthlies, the July 1380. So this is an interesting one, Nick. I think this probably caught your eye as well. Certainly caught my eye. Doing about 9,873 contracts this week. Of that, we don't have really OI numbers because pretty much 9,755 of that went up today. So nobody's touching the 1380s all week, Mr. Nick, until today when they do nearly 10,000 contract. That one, I'm sure that had to come across your radar as well. Was that in any of your blocks? That's just, I think this is the first time since we've been doing the show that I've seen that concentration of liquidity in one session. Did that strike you as odd as well, sir?
Yeah, I mean, it's a surprising strike given that, there was pressure on the downside, but maybe it's somebody's thinking to try to get in there while the going is good in terms of a cheap set of premium. And according to the feed that's reporting the volume, these are all on the screen. So this isn't any block trade or anything like that. I know the 1380 is traded in some other expirations. I think out in the D9s, I might have seen something, but yeah, this was all on the screen. So it is a little bit surprising. I'll be curious to see. I mean, the current open interest in that strike right now is 9,873. So we basically traded the entirety today in volume of that strike's open interest. So it will be. So I guess we'll see if there's a lot of opening there, or if there's some trade out of it, or maybe people were shorted and they're covering. I'll be curious to see how that affects the OI. But yeah, that definitely caught my eye right away. And in particular, for like you usually mention, right? If we see that 1380 and it's a 6 months out, 12 months out, and there's expectation we're still going to move higher, that's one thing. But we're talking about the 30-day option coming off our highs, nothing but on the downside, and this week up a little bit. But for that to trade so close to expiration and really sort of not a level that we've seen in a long time from a futures standpoint, it's pretty interesting.
Yeah, we've seen some gold bugs playing in some crazy strikes. Of course, that big, both of ours crazy trade of the year last year was that crazy upside. But we gotta check in on that one again to see how our friend's doing up there. I'm guessing he's still open, just a wild guess out there on those strikes. Not the deepest, most liquid of strikes that he chose, but this one certainly is interesting for the duration. Like you mentioned, it's not that far out; it's about a month and change, and for the just aggressiveness of the upside move. We needed to move another about 65 handles or so just to have that strike come into play. So yeah, that's a pretty in a very gold buggy product. A lot of people like their upside. That stands out, which is saying a lot. Let's move on. Number two trade here in gold this week, also on the upside. If you're saying to yourself, 1380s is that's for the weak. It's for the timid. I want myself a little bit more out of the money action. You got a little bit longer time horizon. You want to go out to SEP? Well, then we got you covered here with the SEP 1400s, doing almost exact same amount, Nick, about 9,500, which made me first think maybe it was a bit of a calendar spread or something, but today's paper is non-existent. All of the SEP paper went up yesterday, pretty much. So unless someone legged it for a day, which would be weird. Probably not. They did about 1,000 less yesterday as well. So the number's not lining up, let alone the days. So clearly I'm joking. But 9,500 total going up. Of that, most of that, almost 9,000 opening. So a lot of new upside positioning. So perhaps this is marking a new trend, Mr. Nick. People looking at near-term upside, a little bit longer-term upside. Upside still the order of the day when it comes to gold. If that's a little bit too rich for your blood, and again, I think this is probably what was driving it here as well, because looking down here, again, you can find this again, cmegroup.com/TWIFO. You scan down a little bit on that report, listeners, you'll see the 1340s also lighting it up on Thursday this week. Also about 8,700, I should say, going up that way. So it looks like perhaps rather than straight up bullish 1,400 paper, it might have actually been a bit of a vertical, which would make a heck of a lot more sense. About 8,700 of the 1,340, 1,400 call spread going up. Paper opening on both those strikes, 1,340 and 1,400. So that makes you feel a little bit better about people slinging those 1,400s. They're not quite as wild men as you might think on first blush out here in all things gold. Let's go back here to the old July where we got some puts. There were some puts in play. Number 4 here going to the 1280 puts, 6,600 of those going up. The lion's share coming on Wednesday, about half of them, about 3,000 going up on Wednesday. Total of almost 3,000, about 2,600. Looks like opening net on the week. So opening positioning to the downside too. It's not all upside all the time, even though there is a lot of upside. And let's round out the top 5 here. It's pretty close between the 1275 puts and the 13.5 calls also in July. We'll go with the puts because they're about 180 odd contracts more. So they win by a nose. Doing about 5,600. The 1275 puts doing lion's share coming on Wednesday, about 1,800. And today. 1,900, nearly 2,000 going up today, 1,800 on Wednesday. So a lot of paper on these puts as well. All of that kind of back and forth. Looks like pretty much net not opening. But again, we don't have today's numbers, so we don't know for sure. Today's action could have certainly been a lot of opening paper here. Mr. Nick, anything else catching your eye here in all things shiny before we move on, sir?
Yeah, I mean, you called it, went back and looked at the blocks on Thursday, and there was an 8,690 lot of the 1,340, 1,400 call spread that traded, covered against futures. So 8690, what was it? What do we got here? Yeah, 1,740 by 365. And, that happened 5 times. So 8690 by 1825, 8690 on the spread, 1825 on the future covered against 1305. So somebody did that spread, and that's where we're seeing all that action. So I would imagine, I can't even say I would imagine. That could be somebody selling it thinking we're done there. Although if it's hedged, maybe they think it's cheap after coming off the board like that. But that's where that all came from in one trade on the block on Thursday.
That block tool, very handy. So I'm looking at it here myself. You're right, and you shared it out. We'll reshare it for you. Another reason to follow Mr. Nick over there. Options on futures at QuickStrike1 on Twitter. He puts out some good data on this. You're right. Going up $6 on the 1,400, 1,770 on the 1,340. So a little about 1,170 or so on that trade. And against futures at 1,305. So interesting, they did it tied to futures. So again, with the futures leg, maybe not quite as aggressively bullish as it initially looks. Still interesting stuff here. Keep an eye on this one. Always nice to have all the legs broke down here for us, because then we could see exactly what's going on. Speaking of what's going on, the question kind of comes up all the time, Mr. Nick. What the heck is going on out there in all things crude oil? It's kind of been a bit of a weird story of late. You know, we always talk about, usually the push-pull in crude is OPEC versus domestic production here. And that's kind of been the story for the better part of the last year or two. And yet, last, few months, we've seen other factors coming into play. We had some good listener questions on the show last week about what's going on with all that shipping stuff. So suddenly the impact of domestic production could be a little bit muted because they're pretty much at max shipping capacity. They can't really ship too much out more of like the shale. There's not enough pipeline capacity. So they can pump all they want. They're not really going to ship it. So the impact there, of course, you have OPEC and Russia maybe talking about actually starting to jam up their production a little bit again because they're looking to crank some of this stuff out as well. So that could also be why we're getting a little bit of a leaning on that. And if that's not enough, Mr. Nick, speaking of the shipping deal, people who were going on this week, I think it was Morgan Stanley analysts. You know how we love the analysts here. They're talking about what they term to be the biggest change in oil market history, Mr. Nick. They think crude prices are going to soar because of this big change coming in shipping. So, the international shipping for crude is their International Maritime Organization going to enforce new emission standards for their ships. So as a result, people are going to start switching to lower sulfur crude, lower sulfur oil, which of course is not what's coming out of the Middle East. So there could be a bit of a supply shift as people are moving from one type to another. And of course, the refining capacity and all this is going to, probably cause a bit of a demand imbalance. And they're calling for $90 Brent by 2020, which isn't that outlandish given where Brent is. I think it's on like a 10 handle and change rally in the next couple of years. So that isn't as outlandish. I don't think they put in a expected price here. Of course, Brent is the international one, so that's probably the one they would focus on there. They don't have a corresponding price level, but you got to assume it might be interesting there for WTI as well. So a lot of stuff combining to really make this net number on the week. Crude WTI here, giving back the 70 handle this week, Nick, after all this talk. Oh, they're going to make 70. They made 70, and then they couldn't hold on to it. 68 this week, rounding out the week, off about 3 handles and change net on the week. Vol actually up a little bit this week, which is kind of interesting. Net vol still much lower than it was back in the Godot days of a few years ago out there in crude, but still getting a little bit of life. People have always writing in. You don't have to write in again. It's all right. We'll accept it, but we'll talk about it here for you instead. That is this the vol here to stay? We'll see. We've seen a lot of these moves before, and they're kind of short-lived. Vol comes right back in after the move subsides. So we shall see if this is the case as well. Open interest up about 5% this week, a little over 5%. So a decent week out here in WTI. And if you're saying to yourself, what was lighting it up out here in crude this week in WTI? Well, the lion's share, about half of the paper come in the July contract. Again, we're talking about how the weeklies, still don't capture the imagination. It's the monthlies. And 68 puts, surprise, surprise, where we went out right around 68. That strike lighting it up this week to the tune of just a little bit under 30,000 contracts coming here for our number one with a bullet. The lion's share coming actually on Wednesday, actually on Tuesday this week, with about nearly 8,000 going up on Tuesday, about 6,000 today, and the rest kind of scattered throughout the week. So a lot of paper, and that only about 2,300 openings. So a lot of back and forth on this 68 strike here. Not surprising. It's kind of where we're settling out for the week. A lot of debate about where we hold it, where we break through it, all this kind of stuff. So it's going to drive a lot of paper on a strike like this. Followed by number 2, also on the put side, 65 puts again out here in July, doing about 23,500 contracts. The lion's share again today, about 6,700. Maybe some verticals going up. 68, 65 puts here in these puts. Also saw about 6,000, close to it, 5,700 going up on Tuesday. So Tuesday and today, the big drivers for puts out here in WTI. Net about 2,400 opening there as well. So I've got a bit of sneaking suspicion and maybe some play between those two strikes here. I'll have to dig in a little bit later and see if I could find any verticals going up over there. Then we roll out again here to bit of almost a tie again between the 75 calls and the 70 puts. Let's go to the calls because they take it by a nose, 30 contracts. 75 calls also in July, doing about 20,000 and change. The lion's share also actually Monday, 5,300 and followed by 5,000 today. The rest kind of scattered throughout the week. Net slightly opening about 900 contracts. So again, back and forth. Hot on his heels, the 70 puts, 20,055, 30 odd less than the calls doing the lion's share. Also on a tie, close tie between Monday and Wednesday, a couple hundred contracts difference, 5,700 going up on Wednesday, about 4,000 and 4,300 net opening on the week, listeners. And rounding out our top five here, it's going to be 72 calls, about 18,000, 17,800 to be precise here. The lion's share also today, 8,500, net about 1,100 opening, but again, we don't know the OI on today. Since today was kind of an active day, those OI numbers could change markedly going out here. Let's do a little bit of scanning to see if we could see any interesting paper out here. Let's see. Funky Strikes, 80 calls, pretty active out here in Dees, doing about 12,500 contracts. 90 calls, even more active. Actually, not more active, but a little bit farther out of the money here. 90 calls in Jan, doing about 1,200 out here as well. So 90 calls, a little bit active, kind of across the board in a couple of months. Also seeing 35 puts in Dees 2019, doing 3,000 contracts this week. Interesting strike selection. And of course, Mr. Nick, we have lamented the weeklies not lighting it up, but perhaps I misspoke on this front week contract here because they actually did 1,000 lot going up here today. 1,000 of the 70s in the week one contract here. So 70 calls. So perhaps a little bit of action. Mr. Nick, did that weekly trade catch your eye as well? And what else caught your eye out here in Crude this week?
Yeah, that one. But one of the shortcomings of the tool, and we have to overcome this, is that by the time the show starts, the weekly that's expiring on that Friday or the contract that's expiring today, we lose it. It expires at 1:30 Central, so it's not showing up in TWIFO. So unless you're looking at it before the show, you might miss it. But I took a screenshot of the LO4K8, which expired today, and it was good news there from a weekly standpoint. So, as you can see from the futures, we pretty much broke like $3 down toward the 67.5 strike, and today in the week 4. Traded 1575, 1600 of the 67.5 put, another 600 and change of the 68 put, and 300 and change of the 70 put. So that weekly today, this week it traded over 14,000 contracts. Today, over 5,500 contracts. So now there's an instance of exactly the reason to use the weeklies, right? So somebody came in there and was trying to take advantage of the fact that there was a move down and they were hitting on the strike that they thought, or maybe it was trading around when it was down there, or maybe somebody picked a spot where there was some support or just below the support. So the weeklies doing their job, increased 53% from Wednesdays to Thursdays close, so up to 7,200 open interest. So pretty good. So 7,200 open interest about coming in today, 5,500 traded. So you almost get all of the OI trade in volume today. Different strikes, obviously, but still good. So there's a success story for the weeklies, right? And that's when you'd want to, and that's when you expect to use them, is on the day of expiration or close to the day of expiration, when you're getting a move and you're basically trading a cheapo, sort of bet on a future, right? You're trading a binary at that point, more or less. So that's the good news there. And then from a general standpoint, you see the increase in volatility on the July contract, and that's sort of expected when you get inside this, 21 day, 22 day, whatever. You're going to see the pop, especially on a move. You're going to see the pop in the vol typically in the front contract. But as you can see, Mark, you're not seeing much of a vol bid in August and back. So again, this trade inside of the range, you get the short-term pop, right? Because people are trying to buy to take advantage of the move down. But anything, the August contract will encompass the OPEC meeting for June 22nd. So that one's still kind of steady as she goes. And no real change in the vol skew, to be honest with you. So as you would expect, we're kind of still trading. We talked about it. We traded up past 72 a little bit, but we're still sort of in that range. We talked about 68 to 72 or 65 to 75 or 68 to 75. 75 is big resistance. 68 was 70 and 68 were some support there. So, as much as we had a pretty good break here, we didn't really get any kind of change in volatility, because as long as we stay within a range, I don't think we're going to see anything, outside of these little gamma pops. I would imagine that if we don't do anything on Tuesday, I think it's open Sunday night, but if we don't do anything on Sunday night, you'll see the vol come in, and then come a Tuesday, we'll see this front contract vol lower still, even though it's got some decay to make up with the long weekend, if there's not a continued move down, which I think the end of the day kind of showed that it kind of stabilized. We're not going to see much of a bid.
Yeah, where we're seeing some interesting movement as well outside of crude. And by the way, I was looking at some of your weeklies. You're right. Maybe who knows? Maybe Nick, maybe we could take credit for that. Me and you, we've been beating that weekly drum in WTI for how long now? And maybe people are finally starting to listen. Maybe a few brokers actually flipped the switch and made it a little easier to trade that. That's probably more realistically what happened there. But we can take credit for it nonetheless. What do you think?
I think we should, of course. We talk about it enough, and maybe we made some people aware of it. I think they're also doing they're obviously doing a big marketing campaign to let people and incentivize them to trade that stuff. But yeah, I think we're okay to do it as well.
Forget the marketing campaign. It's all us, baby. We're the ones. We've been beating that weekly crude drum for quite some time. Speaking of the weeklies, if you're talking weeklies, you got to kind of talk equities as well. I wish our buddy Sean was here to fill us in on all things going up in Russell. Unfortunately, like I said, he's kind of laid out a little bit, so we'll do that work for him. Of course, the E-mini Russell 2000 options over there on CME these days. It's been a good time. We talked before for all things small cap. A lot of people these days, Nick, they're kind of maybe they're kind of, I wouldn't say tired, but tired is certainly a word you could use for all of this macro kerfuffle. Who said what to whom? Who's doing this to that? Which country is mad at which? What's going on? It's kind of nice to maybe focus on something, in this case, maybe a little bit more domestic. And as you mentioned kind of on the show last week with Tim, that the Russell 2000 has that little bit of insulation to it. More small cap as opposed to large cap. A much smaller percentage of their revenues come from macro international than you do see in the large cap. So as a result, nothing's entirely insulated, obviously, but you're much more insulated from a lot of these things. So if that's your game, if you're kind of out there lamenting all this craziness out there, you want to focus on something a little bit more straightforward, then the Russell 2000 has you. It's been an interesting week for the indices. As we all know, we're going into the holiday weekend, and so usually not a time when a heck of a lot of action. Markets are a little bit thin, a little bit light, and that's kind of what we're seeing going into the end of the week here. The Russell kind of settling down right around about 16, 23, 25 coming into the show, about 23 now. So resting down a little bit heading in to the long holiday weekend. Doesn't mean that people weren't a little active out here in Russell 2000 options, though. OI continues to build up about 9% again this week. Obviously, it's a pretty new product, so starting from a smaller base. But still, interesting to see that people are glomming on. We were talking about the weeklies in WTI, Nick. Weeklies are still where the predominance of the action is here in all the equities. Russell 2000, no exception. Like I said, about 1625 coming into the show here with the 1635 calls. We're the leaders out here about a month or so, a little bit less than that out here in the weeklies. So calls are pretty much where the action was. Going out today, the 1675s were also fairly active again on the upside. 1710s also doing a fair amount of paper out here again, and the weekly is about exactly a month out here on those contracts. If you're looking for puts, it's like the most active put out here this week was probably, looks like the 1545 puts out here. That's kind of looks like that would probably be about number 4 or so on our list here if we were breaking down a top 5 out here in all things Russell. I know, Nick, we talked before too from a vol perspective. Russell is an interesting beast because small cap, just by definition, going to be a little bit more volatile, a little bit more active than those staid, sedate kind of large cap names. Anything catching your eye out there from a volatility perspective, or perhaps skew as well out there in Russell 2000? People always like to talk skew, particularly maybe as it compares and contrasts to all things. In fact, I think we might have a question about this a little bit later. So maybe I'm jumping the gun a bit, but as it compares and contrasts to all things S&P. If you want to save it for the questions, we can do that later too.
I don't think anything really jumping out. You know, the volume. Not a tremendous amount of volume in the options. I still think people are getting used to this. I gotta believe that once they see that there's good open interest and reliability in the underlying contract, and these markets start to get a little bit tighter, this has got to be a good contract to trade, just because it will smooth out some of that, some of the volatility or some of the big moves that occur in the big index that's driven by some of the FANG stocks, right? So. Nothing really out of the ordinary here, although I hesitate to make any conjecture because our numbers look a little bit weird. So I want to take a look at that before I would say anything. But you know, from what I'm seeing, it looks pretty much like it has been looking over the last several weeks.
Yeah, you know, Mr. Nick, I'm not sure if you heard the show last week. I know you were traveling around. We did a deep dive into crypto as well last week, which was kind of refreshing. So I'll leave it up to you where you want to go next. You want to go hit some crypto, or do you want to hit maybe I don't know, a little bit of ags? What are you feeling, sir?
Well, we could talk a little crypto because I think that there's some stuff that we can mention, and then yeah, we can jump over. We have a little bit of time. We could jump over and take a look and pick an ag or yeah, we could pick an ag too. I mean, that sounds good to me. But I mean, crypto, or we can leave crypto for later. I mean, the only thing I really want to say, the crypto, obviously, the market's off this week, so you know that's probably what everybody's seeing, and it came off pretty hard. The one thing I really want to mention about the crypto stuff is that the quick strike tools will start to show the Ethereum real-time index and the Ethereum reference rate in the CME tools come next week. They went live with the feed on one form, but not live with the feed on another form. So we couldn't capture anything until it was live on our feed. But you know, keep an eye out there and take a look. And I believe that coverage is just going to get greater and greater on that side. I mean, there's a few shortcomings with those indexes. But just because of the limited number of exchanges that they're watching, but I think generally because these are the very liquid cryptos, that it's probably a fairly representative price. But you know, keep an eye. There's going to be more and more of those tools out there. I'm sure. I would imagine that there's going to be other indexes as well that are occurring, just because that seems to be the way it's going. And I don't know. They like talking about it for sure, right, Mark? The exchange likes talking about the cryptos.
They did. Tim and I spent a lot of time talking all things crypto last week, which was interesting. Certainly an interesting and a nice change from last year when crypto wasn't really on the radar till the end of the year, kind of at all. Looking at the CME futures right now, they're trading right around 74.90 in the front month. A lot of people have been kind of hemming and hawing, Nick, about this kind of 50-day moving average. Looks like we blew through that. I think it was around 76.11 or so. So we're well south of that now. So all you technicals out there, you technical junkies, I'm not one of you, but all you technical junkies out there, that's the first time I believe that's happened in Bitcoin, at least in some time. So a lot of people who are bulls on this stuff, and you know who you are wringing their hands over that. All this is translating to some decent volume today. It's like about 2,900 contracts going up on CME today, Nick, which we all know is about 5x, so we're close to 15,000 contracts, or I should say coins, slinging over there on CME. So another pretty active day. Doesn't seem like the size of that contract is holding it back. By the way, I did ask Tim on the show last week if they're planning on maybe splitting it, offering a mini. They said they're looking into it, but they don't see a need right now because it's doing decent paper, and I can't say I argue with them here. That's doing pretty good. Actually, looks like I said the front month, but actually looks like the second month is where the June is where the lion's share of the action is today, doing about 1,900 there versus about 900 contracts in the May future there at CME. We also talked the Ether stuff. You mentioned you're going to be lighting that up pretty soon on the platform as well there, Mr. Nick. You know, it's kind of interesting looking at some charts here of kind of year-to-date stuff over there on on crypto and how things are performing. Of course, we had a nice little sell-off, then a nice little rally, and then a nice little sell-off again, which is perhaps confusing and exacerbating some of the bulls out there in the crypto space. Total market cap of all the digital assets was about 604 billion start of the year, climbed to about 835 billion. That's by January 7th. Finished Q1 at 263 billion. So a little bit of a sell-off there. 56% decline over the course of the quarter. Good old Ripple, your friend Ripple there, Mr. Nick. Started the year at about $1.91, finished the quarter 51 cents. This is data through Q1. We're obviously partway through Q2 now. 73% drop out there for all things Ripple. By the way, I was at an event yesterday, Mr. Nick, and they were talking all things crypto, and they were talking about Ripple. And something I wasn't aware of about Ripple, I knew Bitcoin obviously has this finite number that they could actually get to. I forget what the exact number is that they could use. So everyone's mining for effectively what is a finite number of these tokens out there. And then you have Ripple, which apparently is just an arbitrary number they released. I forgot how many it was 100 million or billion or whatever the number was. And they could decide to release more at any time and just devalue the whole thing. Is that, I know you like Ripple, Mr. Nick. Does that feed into your thoughts?
I don't know if that's 100% true of a statement in terms of they can just create more Ripple. I believe what they have done, and I'm actually having a conversation with somebody at Ripple after our show today, so I can actually ask and get a better idea. But I know they escrowed a fair amount of it to have available for later if they wanted to release more of it. So I think I'm going to say, I believe that there's some finite number, but some has been pulled out of the market to keep aside. But I will confirm that if I can get to asking that question when I have my conversation. But I still like it. I think that from an international payment standpoint, that's going to be the one to beat. They're already out there doing quite a bit, and I would say that it's not out of the realm of possibility that QuickStrike at some point will use that currency to take micro payments for people who want to kind of pay as you go on the platform. So that's just a little tidbit to throw out there.
There you go. I didn't even know you were talking to the Ripple folks. So well timed on that one. Yeah, you're right. I do believe they have an escrow, and I do believe they have said they're not going to, violate that or release that. But there is no hard and fast thing preventing them. There's no technological limitation like there is for Bitcoin, which I guess could be a case against it. But the bulls love it. I know there was a big run up when people thought it was going to hit some of the big venues like the Coinbases and others out there. So far, it's not the case, but we shall see. Speaking of Ripple and Ether and all that fun stuff, the old CFTC chairman there, Gary Gensler, he had a speech recently over there at MIT. It sounds like he's coming out pretty hard against a lot of these cryptos, Mr. Nick, where he says essentially there's a strong case for many of the currencies, particularly what we're talking about, Ether and Ripple, that they've been issued and traded in violation of regulations. He thinks they're non-compliant securities, particularly Ripple. So he thinks Bitcoin, however, can remain exempt from current securities regulation. All that news and that speech came out a week or two ago. Didn't really budge the price at the time, so people not that spooked about that. I know you're a bit of a believer here on the crypto front. At least you're becoming one, Nick. I'm still getting pulled along. Maybe you're getting pulled along in your wake here. Does that stuff concern you as well? That the hammer of regulation could come down on these things at any time?
Well, I mean, of course it can, and it could continue to come down on other stuff too. But you've seen people change course just in the year that we've been talking about it, right? You have the big banks saying they're not going to do anything about it, and then all of a sudden, you're seeing headlines where, hey, look out, regular people, here comes Wall Street. We're going to start trading crypto. So I think it's a lot of, I think there's a lot of hand waving going on when it comes to that kind of stuff. But at the same time, it's just these regulatory institutions don't exist if they don't regulate something, right? So they have to continue to make those statements, and I'm sure that Bitcoin has had violations too. There's been more breaches there than there's been anywhere else. So you can't tell me that there's not something wrong there. So I think when it and I think that from a functional standpoint, depending on how each of the cryptos is used, like for the Ripple, from a transfer of wealth from one place to another, if there's an agreed upon exchange rate on a thing, it really doesn't matter where it's trading. It just makes it easy for that. I mean, as long as they're agreed at some fixed pricing on it, then the transaction can happen, and it's just instantaneous. That's where the benefit's going to come. So we'll see. I think it's a lot of posturing. I think I think Wall Street likes making those statements, or the regulation bodies like making those statements, so it can sort of get their ducks in a row, so the trade can start occurring in a more regulated basis with the big guys, as opposed to just letting the sort of the independents, the retails, and all the crypto people do it on their own.
Yes, sir. And up to you. You want to do a quick? I don't know if we really have too much time to do a deep dive into ags. You want to do a quick dive into ags and some questions, or you want to save it more for a deeper dive next week?
Let me just look and see if there's anything. Well, let's see. What do we got? Well, we could. Why don't we? We haven't done this before. Why don't we take a look at the soft red wheat, since it's up quite a bit today, and let's just see what we're unprepared to talk about it, but let's just go out there and look. And
live on the show. I like it. All right. Soft red wheat. You can find it, listeners, cmegroup.com/TWIFO. Click on the ags, click on the wheat, and then you're off to the races. And you know what else is off to the races is good old wheat, up, moving quite a bit, about 5% or so net jump here. So closing out the week right around, looks like about 545 or so. Vol, as you might imagine, with a big move like that, up pretty substantially, kind of across the board. Also, see open interest this week, very strong, up 17% out here in Wheatland. So wheat catching a bit of a bid across the board. Vol, underlying, you name it, open interest. Let's see where the lion's share of the action was out here. And it pretty much was, looks like, what do we got here? Is this looks like a July, this is July, yeah. The July 500 puts leading it off, number one with a bullet, doing nearly 12,000 contracts this week. Kind of tied between Tuesday and Thursday, both doing 10 contracts different, about 34.50 and 34.60 on both days. A total about 3,500 opening. So a lot of action out there. Number two, really quickly, the 550 calls, same month, doing about almost 11,000, about 4,300 coming up there on Tuesday. The net only slightly opening, about 700 contracts. So a lot of back and forth action on those 550s. Not surprising. That's kind of where we went out here at the end of the week. Also seeing the 490 puts, 9,600, about 3,000 of that opening. Nothing going up today, so they're all pretty much earlier this week on those options. Number four, the 530 calls, 9,000, just a little bit over 9,000. Again, about almost half of that coming on Tuesday, a little more than half of that, nearly 5,000 going up on Tuesday, about 5,000 opening. So a lot of opening positioning on the 530s, which we promptly blew through. So interesting there. Right out the top five here, we got the 480 puts doing about 7,000 and change, so about half of that coming on Tuesday, and about 3,000 net opening on the week. So a lot of interesting stuff out here. Mr. Nick, I know the vol is really catching your eye. What are you seeing out here? I got to imagine these skews got to be kind of crazy this week.
Yeah, I mean, it's actually the flip of the index curve, right? So instead of bids to the puts and offers to the calls, this one has got all call bids and all put offers. And week over week, it doesn't look like it made that much of a. There was a little bit of a bump from a volatility standpoint, but I think the majority of the vol move came just kind of sliding or trudging up the vol curve. So I'm actually glad we picked that one, because it's not a curve that you see all too often, where it's just a complete strike from the top right to the bottom left. We're used to seeing that kind of slope in the other direction with the indexes, but this one, so clearly there's some there's some upside interest here. So, and if you look at all the put call ratios on the TWIFO, you're going to see all of the early, both the weeklies and the first two, the July and the August, you're seeing those are well below 1. And then even, and then kind of flat after that. So yeah, I mean, I don't really know that market all that well to have an idea of what people are thinking. I'm sure there's some weather related stuff, and then whatever other import, export, fundamental stuff that we don't necessarily know or talk about. Maybe we have to find somebody that can give us a little bit of help on this one sometime in the future, because this curve looks pretty interesting. And I'm going to go back a little bit further and see if I can see any change. I'm going to go back a couple. Let me go back here and see if that's flipped at all. Yeah, so no, that curve has looked pretty much the same for a long time. So even more of a bid over the last 3 months as well on the call. So definitely continued interest in that upside, in those upside options, and looking at what the futures have done year to date. Let's take a look at that as well. As much as it's up. Well, I guess it's up quite a bit. It's been 460 up to 530, and we've bounced near our highs from the year to date. So we'll have to keep an eye and see if that continues. What will be interesting is when the skew flips here, right? More than anything else. Let's take a look. I'm going to do one more look here. If you give me a second, because I think this will be something. So right now, the front contract is trading around 28 days. So what I'm going to go look at is I'm going to go look at the quick skew numbers for the 30-day constant maturity. And I am, can I get to that from here? I don't know if I can get to that from here. So what I'm going to do very quickly is take a look at wheat quick skew and to see when the last time the skew has flipped in the other direction. So I'm going to take a look. I'll pick the constant there, and I'm going to take my date range, and I'll go back about 3 years. And let's see. Yeah, we haven't, this isn't even as wide as it's been over the course of that 3-year period. So that tells you one thing there. And we have never seen it flip the other direction. We've seen it tighten, and it was tight quite a bit. It was much closer a couple of years ago, but it looks like the 25 delta skew, the width between the call and the put, could get wider still. So, we might see more tilting of this vol curve in the future, but we'll have to take a look. And it doesn't seem to, it doesn't seem to have a tremendous amount of relation to the future here either. So, well, it did tighten. I'm kind of talking to myself almost now looking at this. It did tighten up as the futures broke. But we'll watch, right? That's part of the fun of it. That's
what we do here. We're watching, always watching. You guys are always listening, and you have questions for us. Let's get to them. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. You guys know the drill. Hit us up. If they're fun, we'll answer them. We also ask you guys questions every now and then on the show. Like actually last week we were talking on the show. We asked you guys, what did you want? CME just announced the new Ether index, but it's not really a tradable product yet. So what product do you guys want next in the crypto derivative space? Do you want Bitcoin options? Do you want Ether futures? Do you want Ripple futures? Do you want LightCoin futures? Lion's share, far and away, you guys all want Bitcoin options, 76%. Can't say that really surprised me. We do speak to the options crowd after all. 9% for the rest, 6% for Ripple futures. So the rest kind of bringing up the dregs. It was all Bitcoin options all the time. Can't say that result surprised me. Does that surprise you, Mr. Nick?
No, it doesn't. I don't necessarily, I don't know what I think about that. I'd rather see futures on the other contracts myself first. I think I think there's more fun there. There's more speculation there. And then you can really see what the interest level is for the cryptos in general, right? But yeah, I'm not surprised to see that people want the Bitcoin options. I don't know how soon they're going to get them, though, to be honest.
Talking to Tim last week, didn't seem like it's coming anytime soon. I've heard similar things from the folks over there at SIBO with their future. No one's in a rush to put the options on their futures these days, which is kind of interesting. Let's see here. Got Patrick Snoke saying he saw the title, writing about the title for last week's episode. It was called Talking Tacos. TWIFO, something like that. He said, the title got me excited for Talking Tacos on TWIFO. Tacos, of course, the trade at cash open we were talking about with Tim on the show last week, listeners. Pat goes on to say, I thought we were going to talk about a 2-to-1 beef fish pairs trade. Just a suggestion for next time. Well, we'll take that under advisement there, Pat. I don't know how much beef fish pairs trades we'll be featuring on the show, but you have my word that if that comes up, we shall notify you forthwith for a very in-depth conversation on all of this stuff. Talking Bitcoin before, back to crypto, Mr. Nick. This question actually came up last week. We decided we wanted to give you a chance to weigh in on it as well. Comes from Flyer. They want to know how is Bitcoin's vol calculated? Is a limited supply and abundant demand a current driver upwards for the price? Well, we kind of discussed the latter part of that last week. That was kind of a big driver for last year's run up. Whether that's the case now is a little bit different story. But the first part I think is kind of more interesting, Mr. Nick. You guys are actually doing this over there at Quick Strike. You're actually calculating the vol. I know you're pulling it from the BRR now, but how are you guys doing it? And is like the fragmentation, some of the other issues out there for some of your, I know you're trying to get some implieds and some skews for options out there. Walk us through that process and how challenging that's been.
Yeah, I mean, I don't think that the way we're calculating just sort of the day-over-day volatility is no different than you would for any, equity or futures contract, right? So we're just looking changes over a period of time and seeing what that realized volatility is. One of the little bit of the differences that we do is we not only look at day changes, but we also look at 15-minute bar changes, and we also look at 60-minute bar changes. So what that lets us take a look at is there's sort of a long-term trend in terms of where volatility is. And right now it's probably below 60%. But if I look over the last, 3-month period, we're roughly around 60% for the long-term day-over-day volatility of Bitcoin, because, we have the range has been, it has been nothing as significant as it was in the prior 3 months, or even, from the beginning of the year. So there's that. And then I think the little bit of the difference, or the little kind of different take we try on volatility, is to see, how this intraday-ish volatility looks. So that's why we go to the 15-minute and 60-minute windows. And the reality there is, prior to Thursday and Friday, or prior to Wednesday and Thursday, that short term, that intraday volatility was much lower than the long-term volatility. Right now, it's well above the long-term volatility over the last couple of days, but that's sort of expected, right? You see these big movements, and then and you're going to see. So it's just a way to think about it, right? So maybe there's some short-term trade when the options do come out, that if there are jumps in vol because of these moves, the vol will pop based on what we're seeing here. But the reality is, over the last 3 months, we're seeing sort of a steady 60% volatility in that contract. So maybe the trade is to weather the storm on these moves, be short, and try to mean revert back to this day over day level, and maybe that's what people are waiting for. They want to short the volatility, because you might get somebody who's not understanding it, or thinks that it moves so much that it has to be high volatility, and it may not necessarily be the case.
Yeah, we kind of burst that bubble a little bit before here on the show with Bitcoin vol. Perhaps not quite it moves, but not perhaps not the 10,000% people are writing in suggesting and crazy things like that. Let's see here. Some guy complaining about he can't get filled short lumber. I'm with you. I don't know. I don't trade a lot of short lumber, so I can't comment on that in particular. But I know some of these less liquid ones, it can be a challenge. You got to work that stuff. So stay with it. Good, more power to you, sir. Let us know how it works out for you. This guy here, Uze, wants to know, can I trade gold silver spread options on CME? Well, I know they have the futures. In fact, I'm looking right now, gold silver ratio futures. So they have the futures there. I don't think, maybe Nick, you know all the nuanced products. Is there an option on that future? I think just a future, right?
Yeah, right now there's just a future, and to be honest, I think that's a great product. It's nothing has come of it from a publicity standpoint or anything like that. But no options on it yet. But I imagine if they start to get a little bit of activity, that we might see that stuff.
Yeah, I wouldn't mind seeing that out there myself as an interesting product. I know that one has kind of been on your radar for quite a bit in there, Mr. Nick. And it'll probably stay on that for the near future. So sadly, the answer is no, but maybe that'll change in the near future. You know what that music means, though, listeners? Unfortunately, hard to believe. It's been an hour already. We've come to the end of another epic journey through the world of futures options. Talked indexes. We talked gold, talked some ags, talked some crude, talked some crypto. What more do you want? I guess you want your dairy and everything else. You guys all want. I shouldn't say that because you guys will hit us up with what you want. You can do that if you want. We try to squeeze as much as we can. It's only an hour show, listeners. So some of the more esoteric stuff doesn't get hit on all the time. But that said, we try to keep you covered. If you got a product you're really into, maybe you want to know more about the spread options or something else like that, or a product you want to see us talk about here on TWIFO, hit us up. We do like hearing from you guys. And if there's something going on out there, chances are it'll be featured on the show. And of course, you can always follow along with the report, cmegroup.com/TWIFO, to learn more as well. And of course, our buddy Sean couldn't be here, so check out FTSE Russell, FTSE Russell, 2 S's, 2 L's.com to learn all about the indexes, what they have going on over there, some new products they're cooking up, a lot of cool stuff to pay attention to there. Speaking of cool stuff, Mr. Nick, you guys are always cranking out cool stuff. What's up your sleeve for this week, sir?
For this week, let's see. I think one thing you could take a look at out on the CME Group website, we released the options calculator. So there's a CME specific calculator where you can jump right into all the asset classes, and then there's a calculator for each of the benchmark products. So there's probably about 40-ish products that are in that tool, and you can then jump to a particular expiration and pull up a strike, and it'll give that volatility to you, and you can calc your prices, and you could save your calcs. It'll give you a little history track. And then there's also a generic calculator where you can price pretty much any futures related pricing scheme that you want. So that's one to definitely take a look at, along with the strategy simulator if you haven't seen that as of yet. And then it's going to be a busy month for us. There'll be a big release at the end of the quarter or in the beginning of the third quarter in terms of historical volatility. So stay tuned for that announcement. And then some other great event calendar tools, as well as some event vol tools. And then sort of a secret one that'll be out very soon. Can't talk about that yet. As soon as we could talk about it, we'll let people know.
Ooh, secret stuff. We like that. Stay tuned. Bantix.com, Bantix.com is the place to see all that stuff in action. You got questions about their crypto tools, how they're doing crypto volatility, Bitcoin volatility, hit them up over there. Bantix.com. They'll love to hear from you. And maybe follow them on Twitter at QuickStrike, QuickStrike1. Don't forget the one. Or just QuickStrike1. There on Twitter to get all these cool charts we're talking about, all this data we're pushing out throughout the show. He does that all week long too, so follow them over there while you're at it. On behalf of Mr. Nick and Sean, hopefully he recovers soon, and indeed our buddies over there at CME and myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the other cool stuff that you guys do. Keep it up, and we'll see you back next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.